right, we are back for episode 10 of the Visionary Mindset podcast. And today we have Matt, the mortgage guy. This is actually our first time meeting in person. So I'm excited to get to know a little bit more about you and your journey. So why don't you start us off and tell us a little bit about where you started, how you got into mortgage and just how it's been working in the industry so far.
For sure. Yeah. I'm happy to give the story, and Matt, the mortgage guy, is how I've been branded for 10 years. So, when I sponsor the Little League or the kids' elementary school or the swim team, when I say Matt Gouget, people are like, what's that again?
Yeah.
But long before I was Matt, the mortgage guy in the mortgage industry, just a kid who grew up, going to public school and in Sacramento, California. Been here all my life, besides a couple stints studying abroad. And when I think about, my childhood and whatnot, I had this funny conversation with a past client recently, talking about how that entrepreneurial spirit has always been inside me, right? Delivering newspapers at a young age, delivering magazines, doing the math and telling my mom hey, let's go to Target. I want to buy 10 packs of 10 Big Red gum because I know I can get it for 99
and then go
cents.
And sell them.
Yeah, and if I sell them 25 cents each, then that dollar turns into $2.50. So I had that spirit, and I have kind of that business mind, I think, from a young age.
Yeah.
Went to school, went to Sac State for business, got my degree in international business and Spanish. When I graduated, I was a poker player, and I enjoyed poker. And so I fell into this position managing the Limelight card room. And so over the last 20 years of my life, 10 of those years, my first 10 years out of college, was in the poker room, managing that. Last 10 has been in mortgage. And although those things might seem really different, the same skill set, I think, that's helped me be successful in mortgage helped me in the card room, right? I'm able to talk to all kinds of people from all different backgrounds. And the card room was located, a really rich neighborhood in East Sacramento and some not so nice neighborhoods. And, growing up, going to public school, going to Sacramento High School, I got to see a bunch of diversity when I was a kid. And I think that that is something that I really take a lot of pride in. California in general is a really diverse place.
Yeah.
And I feel like I can relate to most anybody from any background. And so I took a lot of those people skills that I had from the card room, my love for math and numbers.
Yeah.
And when somebody approached me in 2013, was like, hey, I was in the mortgage industry. I went out and started a business. I'm thinking about getting back into it. I'd love for you to join me. I think you'd be good at it. It seemed like a natural fit. From a timing perspective, it's a funny story. It was literally 6 months after my second son was born.
Damn.
And, how about 100% commission job? With no health benefits.
Right,
you
no
just
guarantees.
Had your second child. How does that sound? But ever since I got into mortgage, it was, burn the boats. I got to succeed. And, wanting to support and do well for my family was a big driver of that.
Yeah.
Along with just naturally built-in work ethic. I've never been afraid of hard work. And whenever I coach loan officers or talk to other entrepreneurs, there's something to just, having that built in you. You're going to succeed in anything you do. I was off to the races in 2014. I probably went to 150 networking events. I remember telling somebody
in that 1 year,
I was going to 3 a week.
Oh my gosh.
Anybody who's been to networking events, there's some good, there's some bad, there's some terrible, right? I went to some of these events that were just some God bless people out there at some of these networking events, but there was a bunch of freaks and weirdos at some of these things.
Yeah.
And, I had to go to the bad ones to be able to meet some of the great people I did. I've got great relationships from those early days where, 7 people or 11 people showed up to a networking event, and I happened to meet Jazz Preet, who became a friend.
Yep.
Did a lot of mortgages for him and his business partner and his family. We ended up splitting King season tickets. And had I not gone to the bad events, or even that event, on the surface might have looked bad,
never know.
I never would have met Jazz Preet. I've had a long, good run in mortgage. And I think that, my business has always just been based on relationship and helping people out. And for a kid who grew up relatively poor, for a kid who went to public school, my goal has always been to keep it simple. Mm-hmm. And I think that's what's resonated with people. My YouTube channel, shout out, go subscribe to Matt the Mortgage Guy on YouTube. I want to explain this in a simple fashion, right? I don't need to impress you with big fancy words and talk, yield spread premium and mortgage nerd talk. I want the average person who's doing their first or second mortgage to understand what it is. Here's your payment. Here's what it looks like at different price points. Here's how the process is going to look. And so, I feel like I'm hitting my stride in mortgage, to be honest, right? I'm in a place where I'm not, even though some might consider it 100% commission sales, I'm not selling anybody anything. I'm out there educating people, empowering them to make good financial decisions around their mortgage by educating them.
Right.
And with that, some people choose to work with me and some don't. And so, that relationship with the client has served me well. I've got lots of great real estate agent relationships. And of course, 10 years of networking, going to all these meetings, I got referral partners that say, hey, I know if I refer somebody to Matt, he's going to give them good advice.
You mentioned the Kings. I was going to ask you if you were related or like how you got into that, because I thought I saw you guys have had season tickets.
Yeah.
Tell us that connection with Jaspreet, and you have season tickets with the Kings, and maybe how that's played into kind of building connections with referral partners or whoever it may be to kind of provide something for them to build a good connection.
Yeah, and that's the thing too. When you do anything in business, people do business who they like and trust.
Yeah.
And so it's not a matter of like me shouting from the rooftops, hey, I've got a 1-0 buy down program, or this is a specific program we have. It's like, oh, I follow that guy Matt. He's a family man.
Yep.
He's into the Sacramento Kings. He's born and raised in Sacramento. This is somebody I relate with. And so born and raised in Sacramento, lifelong Kings fan. And for Kings, it's been truly a lifelong love, right? Yeah. You got to really love a team to follow them through the thick and thin that we've seen with the Sacramento Kings. But when they came to Sacramento in 1985, I was born in 1980, so I was 5 years old. My grandmother worked for the state, and I think it was somebody in their office that had like a share, like they shared season tickets. And back then, honestly, Arco Arena, like you can get in for next to free. So being a season ticket holder in the 80s for the Sacramento Kings wasn't anything special. But my grandma used to take me to a bunch of Kings games. And I remember, my grandfather could care less about basketball. And so I was the only grandson. It was 5 granddaughters and 1 grandson. And so I always joke with my grandma, I was her favorite grandson because I was her only grandson. But we would go to Sacramento Kings games. And my grandma's all of like 4'10", and she's jumping up and down, really excited. And it was like special trips with her in her blue Cadillac to those Kings games. And then later in life, when I was in elementary school, my PE teacher Pam Courtney, who recently passed away, was a huge Kings fan, and I bonded with her over my love for sports, my love for the Kings. But for me, like the integration with that. And some of my personal interests and client relationships is, I've been in Sacramento. So when we're talking about, they're buying a house in this specific neighborhood, I can talk through the numbers. I can say, oh yeah, I've done loans in this neighborhood, and I've past clients of mine who have bought here really, really enjoy it for this reason or for that reason. Yep. It's funny too. I'll meet a client, and I'm not the real estate agent, so I'm not necessarily the one that's creating we're going to walk through this house and that house. I know you want to live in 95826 or 95608 or 956, whatever it is, right?
Codes.
Like, that's the real estate agent's job, but I have input, right? And people come to me because they like and trust me. And so, they're looking in the $500,000 to $600,000 price point. I'm like, hey, why don't you check out 95826, over by Sacramento State. And, you're right near the freeway. You can get to Folsom in 15 minutes. You get downtown in 10 minutes. And so being Sacramentan, I think, is something that people relate to. And then, of course, it's like, rooting for the Sacramento Kings and other interests. I'm seeing a bunch of people, create business networking relationships through pickleball or whatever your interests are, right? And so at the end of the day, like anybody in any business, at the core, we're human beings, right? And so that plays into my business. And, my social, quote unquote, strategy is to be my authentic self.
Yep.
And that's the thing I really love about business is I'm out there spreading education. I'm sharing pics of my family. My family's everything to me. I got a beautiful wife. What did we just celebrate? 16 years married, and
wow.
Next year will be 20
Congrats.
years together. Thank you. My boys are 15 and 11. And so, that's me. I also happen to run a mortgage business, right?
Yeah.
Like I'm a family man with a mortgage business. I'm not, a mortgage guy with a family. And so all of that plays in. I honestly think some of my best business relationships and some of my clients, when you're your authentic self online, they raise their hand and say, hey, this is somebody I want to work with. Nothing to do with mortgage products, nothing to do with my knowledge. Although I've closed 14 or 1,500 transactions, so I know what I'm doing on the mortgage side.
Right.
But if anybody thinks about some of the business relationships they have, my CPA is a nice, honest guy. That's why I chose him.
Yeah.
Person I choose to, go, wash my car with. Like, it's a nice family-owned business. So all those things, at the core of it is a relationship. At U Mortgage, one of our core values is relationships, not transactions.
Yeah.
And that's something that's always been ingrained in me and my business.
I love that. So, you mentioned showing up online and showing that side of you. How important, or how have you utilized that over the last few years? What do you kind of do or show people online to, express your family or just your values?
I think that anybody who's online, and man, if you're a business owner in 2024, it's mandatory.
Yeah.
But what people get confused is they think that having an online presence means advertising, means marketing. A lot of times it's just showing up. Ingrained in Matt, the family man, Matt, the Sacramento Kings fan, is, here's a client experience that we just had where client thought they were going to do X, Y, and Z. We showed them this different strategy. It worked out really well. And that is what resonates with people.
Yes.
What I've learned with any online content is like stories sell.
Yes.
Somebody sees a story and they're like, oh, that's kind of like my situation where I thought that because, I had this house and this interest rate of 3.25% that I wasn't going to move. Right. But I saw a story where Matt helped the client use that equity, move to that, different school district, go from Sacramento School District to San Juan. Sorry, Sacramento School District. San Juan's better. And so, you tell those stories and then people resonate with that. And for me, what resonates with me from what I see and what I'm also trying to do is, it all is intertwined.
Yeah.
Right? There's no like separation. I'm going to do 2 business posts. I'm going to do 2 personal posts. It might be me and my kids at my office, right? Yeah. It might be me and my boys walking through an open house, and it's funny that an 11-year-old is open enough to tell the agent at the home that the closet stinks. And so, that's my life.
Yeah.
And my life involves a beautiful family and recreational stuff like poker and basketball. And then, of course, I'm doing mortgages day in and day out. As that's what ultimately provides for the family, but it's all intertwined.
I've always been trying to push that about, storytelling and really show people like behind the scenes and into your life. I feel like that's something that's very underutilized by a lot of people in the real estate industry, but just business in general is, people want to know about you. And you mentioned know, like, and trust, mm-hmm. right? And testimonials from, previous clients of how did you actually help them, with their situation so that they can relate to, what might be happening in their life. So I totally agree with that. Like stories, everybody wants to be flashy and pick up on trends nowadays. And I think that we need to get away from that, really, and right. I think it's doing a disservice to a lot of people, in the industry. So, going into mortgage right now, what changes are you seeing and what are you doing to advise, educate, and help people in, the last few years we've seen a lot of change, and going into 2025, what are we going to be seeing?
For sure. Yeah. Anybody who hears, the word mortgage or real estate in today's current environment thinks about like, oh my gosh, rates are so high, mm-hmm. relatively speaking, right? Versus the last couple of years. Oh my gosh, prices are high. Oh my gosh, mortgage payments are high. And so I know that, and I'm not hiding from that, right? There's a lot of fear, uncertainty, and doubt. If you can gain somebody's trust by educating them a little bit, that's what I try to do, because somebody comes to me, they're a first-time home buyer. The numbers are overwhelming. The thought of a 30-year mortgage is overwhelming. And so I want to have a casual conversation and just say, I'm going to give you a bunch of information. I'm going to educate you.
Yep.
There's no obligation to buy. And I think once you get past that, and I say empower people through education because I believe it. I've seen it. I've seen somebody like change their demeanor, where they come to me and they're afraid. Mm-hmm. They're scared. And that's a common, I think, feeling. And when I talk to some real estate agent partners or anybody else, that's part of my job, is to make somebody feel really comfortable with the process. And so all these terms, all these different, numbers on a piece of paper, consumers are overwhelmed.
Yeah.
If I say, hey, listen, I'm going to walk through a pre-approval with you. We'll see not just what you qualify for, but at $400,000 with 5% down, here's what the payment looks like. I'll show you $425 and $450, and then you guys decide what fits into your budget. You're going to give that person a lot of, self-confidence where they go, before I had no idea.
Yeah.
And quite honestly, like that's how some businesses operate. And that's why some people are afraid, because they just are like, do I qualify for this house? Yes. And then they go look at it and they're like, they don't even realize a $3,400 payment's attached to it, or $3,800 payment.
Yeah.
But, I give them all that education up front. So, and I tell them up front, you're going to know before you walk into open houses what that mortgage looks like at $400, $425, and $450.
Yep.
Get that foundation built, and then tell your agent, hey, it's just the two of us. We're planning on maybe having kids. So I think a 3-bedroom, 2-bath house is something we're looking for. Our budget is here, and I've talked to Matt. I know the numbers. So something between $425 and $450. And then that agent can go start looking at houses. And that's when it becomes exciting.
Right. Yeah.
For a lot of people I talk to, it's like,
know.
yeah, I don't want the overwhelming feeling to be, fear, uncertainty, and doubt.
Yeah.
I want you to be excited.
Yes.
Because the reason they come to you in the first place is they're like, I'd love to own a house where I don't know what next year's rent increase, is going to be, or whether the landlord is going to kick me out because they've, going to sell it, or they've got family members moving in. Like that's fear, uncertainty, and doubt is living in a rental where, there's 40% increase over the last 5 years, and you don't know whether or not you're going to be there 5 years from now. And so, that's the fun part of my job, honestly, is just connecting with other human beings. And Ed Milet said this at a conference I was at last week, and it resonates so much. Like, you are the most qualified to help the person you used to be. I used to be in a position where I didn't understand, right? And somebody explained something to me and empowered me to make a good decision. And so that's what I want people to know too, is people come to me and they're, maybe a little bit intimidated, or they're insecure. Like, I don't understand this mortgage stuff. I don't understand these numbers. All right, I'm gonna give it to you simple. I'm a guy who went to public school, didn't grow up with much, and so I can relate to just about anybody, and I can keep it simple. My wife will forever get credit for giving me some of the best advice in my mortgage career when I was getting started. I went through all the education, and I'm gung-ho, and I'm learning, and I'm studying, and I've got all these fancy mortgage terms. I'm talking to somebody in our home office, and she came in and she was like, what were you just talking about? And I was like, I was explaining to him how like the mortgage spread works, and how, the economic numbers affect how, mortgage yields are calculated. And she's like, people just want like a mortgage guy. Like, that's my guy who's going to explain things to me simple.
The brand was born?
I promise you, like, I was going to be Matt Gouget, mortgage professional, like MGMP, it was something really tacky, right? And she was like, they just want a mortgage guy. So for sure she gets credit for mortgage guy. And then she gets credit for pretend like you're talking to my grandma. There's a lot of people in the same position as my wife, first generation, that's born in the US. And so like English might not be the first language. And even if it is, math is not people's first language for most people. And I understand that. Like, I've got this crazy just ability with numbers where it all just makes sense to me. But I realize that that's not everybody. And so I tell a nurse or a firefighter or a school teacher, like, you're great at that, and I'm not.
Yep.
I'm really good at numbers, right? And so I can help explain those numbers to you, but I do it in a simple way because that's, all the YouTube comment, another shout out, Matt the Mortgage Guy on YouTube, go subscribe, is I'm going to pretend like I'm teaching it to a 5th grader.
Yeah.
And if a 5th grader can understand it, then most people can. Honestly, I'm not perfect. So sometimes I get a little bit too analytical, but my wife was the original one that said, keep it simple.
Yeah.
Pretend like you're talking to my grandma or somebody who, doesn't, even the term mortgage sometimes. Sometimes you just got to tell somebody, I'm the guy that can get you the home loan. And so I constantly remind myself that. And I think of the feedback I've gotten, that's what people really appreciate. It's like, you kept it simple.
What do you think over the years, what's been the most like impactful story that you can tell of, helping a client?
I got a couple.
Okay.
And forever I told the story of the veteran. So I'm gonna tell that one real quick. I'm gonna tell the other story. Veteran, 57 years old. It was probably 2016 or 17. Didn't ever think he'd buy a house. Was a veteran. Served our country, and so they have those great VA benefits where they can 100% financing, no mortgage insurance. It's the greatest loan, right? But people don't know unless you educate them. So I empowered them. Like, here's what you're eligible to do from a loan perspective because you served our country.
Yeah.
Fast forward, bought a great house. We're sitting at the closing table. Real estate agents there, title agents there. I'm there. Dave's there. In the middle of this signing, 57-year-old man's man, right?
Yeah.
That served our country. He stood up on the table, and I got to recreate it because it was amazing. He's like this, right? And he's looking down at the paperwork, and all of us were like, what's Dave doing? And he's crying.
Oh, wow.
And he's like, I never think this would be possible, Matt. I never think I'd own a home. So I start crying. The real estate agent starts crying. The title agent starts crying. And in those moments, you realize, like, this is something special.
Yeah.
I get reminded of it all the time. Last week, I came back to my office. I was like, I do this every day. 14 or 1,500 times I've written a home loan. Mm-hmm. For a lot of people, Dave's first time. It's life-changing for him, and truly life-changing. Fast forward 2020, rates are lower.
Yep.
We refinanced him, took cash out because he'd gained a bunch of equity.
Yep.
He took that cash and he bought this little bar up in Pollock Pines somewhere.
So now he's got a little business now, too.
Business. I think he ended up in this last year. I don't know if he sold it yet. I got to talk to him.
Yeah.
He's got a new wife from the Philippines. He's got,
wow.
I think he sold the bar, and next is the house.
Yeah.
And then he's going to move to the Philippines, this big old nest egg. All possible from the VA loan, all possible because he was empowered through education. And so that's my quick version of Dave's story.
Yeah.
The other one that just, like, I love this story so much, dude. I help a family, and I don't want to give her specific email address, but part of this email was Adopt for God's Love.
Okay.
This amazing human being who's a past client of mine had it in her heart to adopt. And so they had adopted 4 children. 2 of them were special needs. And so she's got disabled children who she's raising. So when they come to me initially to get pre-approved, this is not just like, hey, I'd love to move from a rental to a home. It's like, moving these kids is hard.
Yeah.
I can't widen doorways for a wheelchair, and I can't make things in this home that's not mine be able to fit my kids. And so that's another one. We're crying at the closing. Like, this is life-changing for this family. And over the last couple years, husband had health issues. He passed away.
Wow.
She was terrified that this house that they bought, she wasn't going to be able to afford it and keep the kids who they needed it. This house was built for them. It's got widened doorways, and it's got stuff that makes it accessible for the kids with special needs and disabilities. I think it was late 2021. I talked to her, and I was like, we're going to be able to save you $850 a month.
Damn.
And in mortgage, we're mortgage advisors, but really we're debt advisors. So to a certain extent, like, it's a financial advisory role.
Right.
I'm looking at her and her budget and all this stuff, and me and her are seeing the same thing. Like, you get to keep these kids in this house, and you can't afford it. And being a mortgage broker is so much more than, like, running some numbers. Yes, you qualify. No, you don't. Congrats.
Right.
You closed.
Yep.
Holly, still a great friend today, is still in that home, still taking care of those great kids, serving at the highest level, in my opinion, like adopting and taking care of those kids. And that, to me, like, what a cool job to be in, dude.
Amazing.
Yeah. And so a lot of times it's, the numbers part of it I enjoy because I'm a math guy. But really, like, it's the people, dude. It's the people and the stories, and those stories will live with me forever. And I've got hundreds of them that don't evoke as much emotion as that. But it's like, single mom, didn't know if she'd be able to buy a home, and she's got a 5-year-old kid, and, like, it'd be great to get a home that I know where my kid's going to go to school from kindergarten through 6th grade. Like, that's a big deal.
Yeah.
And so, like, countless of those stories, it's really awesome. I remember I had a great June in a market where we're not doing as much transactions as we've done in years past. I think I did, 13 loans for $7 million. And that was like the highlight. And then I put something, into a post that I said, here's the stories. Here's the 13 stories, the 13 families that were changed, and the 13 families that, I had the pleasure of being part of that journey with them. And so, as I talk about it, I just think to myself, man, like what a blessed place to be in, to be able to help people out. And quite honestly, I feel equally as blessed all the people that contact me. And I go, you know what? I think that deal that your credit union is offering on the home equity line of credit, like that's what makes most sense to you. Mm-hmm. Hey, I know that, there's a bunch of news out there about refinance and rates falling, but truth be told, like it doesn't make sense for you yet. Let's wait another 6 months. Let's hold off for now. And for 10 years, it's just been, I'm going to give people the best advice I can based on everything I know.
Yep.
And, my mortgage knowledge, my math. I'm going to give them advice. If it was me, this is what I would do. So sometimes it's yes, sometimes it's no. Sometimes it turns to a phenomenal story.
Well, and I bet it sucks because there's probably people in the industry that just want to make that transaction. So that, why not make this money and just refinance them now and get that deal done when it's really, when you're over here saying, no, that's not the best option.
Yeah.
Like, let's wait. Like, let me advise you in the, the right way.
You're 100% right. And unfortunately, over the last 2.5 years, rates have been elevated. Mortgage transactions have gone down a ton. And so with that, you're going to get, some seedy characters. I don't want to call out specific companies. Rocket Mortgage. Dude, there's data out there. There is data. Yeah. And it will show you cash out refinance, how much the rate went up. It'll say like it's a +3 or +2. It went up 3 or 2%. It'll show you the segment of the credit scores. And so, I've got friends at BlackRock, dude. I can get this data, and I think I'm not the only one, right? The data's out there.
Yeah.
Like Rocket Mortgage is out there, and of course they've got call centers. And so this is the public service announcement to anybody who's out there. If you talk to somebody you like and trust, and their commission is based on you closing a loan, they say, don't do it. Mm-hmm. I wouldn't do that right now. It's probably a good sign that it's good advice, right? Because they're going to get paid if they close it. Yep. But if there's somebody on the other end of the line at a call center who's only, in it transactionally to put another, check mark up on the board and hit some sort of sales quota, I could, with my math skills and, quote unquote sales skills, talk somebody into something that wasn't right for them. But there's other people out there that, whether it's desperation or whatever it is. And so the public service announcement is, especially right now, rates are coming down at 6.5%. They say that 2 million people are going to be in the money for refinance. At 6%, another 2 million. At 5.5%, another. So 6 million people are going to be eligible and in the money. But Rocket Mortgage wants 20 million people, right? They want somebody who's, I don't know, maybe 25 grand to pay off this credit card debt. Oh yeah, sure. Go from 2.5 to 5.5. Don't do that. Like, don't go up 3% in rate for $25,000 in credit card debt. Talk to somebody who is going to give you the advice that they would give themselves. Maybe a little $25,000 home equity line of credit would be the best bet. Yeah. And have a plan to pay that off quick. Leave that 2.5% alone. And so, not all mortgage advice is created equal. Thankfully, it's proven itself over time for me that like giving people good advice, doing right by people has helped me grow my business beyond my wildest dreams. But yeah, there's people out there, to your point, that are out there transactionally. And that's what you want to find as a consumer, is somebody who's relationship based. Imagine if after 10 years of telling you and everybody else how much I take care of people, like I screw over one person or two people.
Yeah.
And then it's like, oh, that bad review turns into, somebody talking bad about you. Like I live for like positive client experience and referrals. When you're in a call center and you've just got unlimited amount of leads to call on, it's just get this transaction closed.
Clockwork. They're just
Yeah. Oh, they're the worst, dude. That's why, like, I got no shame in saying what it is and calling them out by name.
I've heard some bad things.
Yeah, right. Yeah, you've heard correct, and the data supports it. Right. That's the thing too. If it was just like, oh, I heard, or I don't like them for a specific reason, like the data shows it, and that's what truly sickens me as somebody who's a consumer advocate. Is sub 640 credit score, increasing the rate by 3.5%. all to pay off 20 grand in credit card debt, where I know like long term, it's a terrible financial decision for somebody. It would never be something that in some cases, that 23-year-old call center agent might not even know, right? They just got, their first job at Chick-fil-A. Yeah. And then they came over to Rocket, and so they're like, just close loan. That's all you got to do. And the crazy part is there's a lot of mortgage going on in Michigan. There's a lot of big lenders. UWM's the largest lender in the country. They're a great lender
out of Michigan.
in Pontiac. Yeah. And so these people move from company to company. And so I've talked to past employees from Rocket, and I don't want to, spend the whole time shitting on them, but they deserve it. Yeah. They talk about the scripts. The scripts are like, they've got an objection for their rate going up 3%.
There you go.
Tell them this, this, and this.
I haven't seen many commercials recently. I remember they had quite a bit of commercials.
Yeah, they're coming for you, bro. Don't worry.
Is it because
they're coming for you?
They're getting them ready. They're getting the next set ready.
Well, they're for sure pounding the phones, and this is something that people should probably be prepared for in a decreasing interest rate environment that we're heading into. Like, the floodgates will open.
Yeah.
If you get your mortgage credit report pulled, I know a bunch of people who are advocating in the mortgage broker community to make this illegal, and they're almost there. It's going to be illegal. But you get a mortgage credit report pulled, the credit bureaus sell that data. I've heard of 80, 100, 120 calls a day to the client. And, advocating that that's not good for the client is surprisingly hard. They're like, oh no, like the client should be able to have options. Well, it's nothing to do with options when not only are they calling 100 times a day, but they're lying. Like, I've seen the text messages. You pull credit, and then somebody knows that your company pulled credit. They mention you. Oh, I'm working with Matt over at U Mortgage, and I'd love to show you how we can lower your interest rate if we send it to this lender. That's just bad business. Right?
Something similar happened to me a couple of years ago, where my contact got out there, and then literally the next day, not joking, just 10 calls like every hour. I'm trying to deal with my own business, and I'm just getting all these calls. So they're planning to make that illegal?
Yeah, they're getting really close. Like, it's been probably a year and a half in the works. Like, Brendan McKay and a bunch of people who are involved in the broker community talking directly to legislators and saying, like, this is bad for consumers. We need to stop this. Are going to get it passed. Because I've got clients, they're trying to run a small business. It's a small dentist office. Right. And that office is getting 120 calls. Yep. They can't even run their business because, supposedly this is in the best interest of the consumer for a bunch of, unscrupulous lenders to buy that data, lie, overpromise, bait and switch, all the crazy tactics. So, they can't be gone fast enough, man.
So in the industry, we're going to see rates come down a little bit next year. For me and my wife, Diana, we're hoping to purchase in the next year or two. How do you see, with inflation and home prices, what do you see the trends? Like, what's going to happen in the next year?
Yeah, it's the $1 million question, right? People are like, what's going to happen with interest rates? What's going to happen with home prices? And I'm having these conversations every day and been for 2.5 years. So I get it, where people are like, man, changing. this is tough. Yeah. Like, affordability is a real thing, especially in California, right? It might not hit you as hard if you're in Tennessee or Columbus, Ohio, but in California, it's tough. And people are looking at, like, oh my gosh, this price point, like, we're not even talking a fancy house. We're talking a first-time buyer with 5% down, and it's a $4,200 payment. And so what I believe is going to happen is mortgage rates are going to continue to go down. Like, the Fed is meeting on today and tomorrow. Mm-hmm. They're going to announce a 25 or 50 basis point cut of the Fed funds rate, which honestly, that's already baked into mortgage rates. Like, we've seen mortgage rates go from mid 7s to low 6s. And so most of what the Fed is probably going to do for the rest of 24 is already baked into mortgage rates. But with the unwinding of these 11 rate hikes that the Fed had, where they're purposely trying to slow down inflation and reach their dual mandate, that has caused mortgage interest rates to go up. When they ease off, mortgage rates will come down. It's the easiest way to kind of explain it and understand it. Right. And so there's, like, when I talk to people too, they're like, how do you know? It's hard to tell. Like, 100% certainty, mortgage rates are coming down. Like, there's a bunch of different stuff where the Fed's cutting the Fed funds rate, the 10-year Treasury's dropping, and without getting too technical, like, there's a spread between the 10-year Treasury and 30-year fixed rate mortgages that is going to narrow. So rates, low 6s on a 30-year fixed roughly today. Over the next 12 or 18 months, might reach the low 5s. For anybody waiting for 3 or 4%, I wouldn't hold your breath, because you'll probably run out of air. But the problem is rates will come down maybe 1%, right? And so that helps affordability a little bit. There's still a shortage of housing units.
That's what
right?
I've heard,
And so the shortage of housing units versus whatever demand we have, makes it so home prices can't really decline. And if we lower interest rates and that injects more demand, that has upward pressure on home prices.
Yeah.
The hope is that it doesn't push home prices up too much. The last thing we want is for rates to go all the way down to 5.25. A bunch of buyers are excited, but then 600 turned into 630 or 640. So I think home prices, if you really look at home prices, especially in most areas in California where I've got buyers, between summer of 22, where it kind of peaked, we've stayed relatively flat. Mm-hmm. And for some people, it feels like maybe home prices are increased or something, but it's really during the winter months, we go down 4 or 5%. And during the, ramp up into spring, it goes up by 9 or 10. And so seasonally adjusted or year over year, it's a 4 or 5% increase, which is kind of normal and natural for homes. So a year from now, you might expect home prices to be similar or 0 to 5% more than today.
Okay.
Just based on supply and demand, right? Anybody who thinks there's a crash coming, bless you.
Yeah.
Bless you and what other conspiracy theories you believe in. But rates come down a little bit, and so that makes it a little bit more affordable. But really, when I talk to people, what I've realized doing this a decade and then my own experience as a first-time home buyer is it's always going to feel uncomfortable. Mm-hmm. It's always going to be a stretch. Me and my wife met, and we bought our first house the end of 2006. And at the time, our first was 6.75% and our second was 12%.
Wow.
And so between a first mortgage and a second mortgage, we were paying $2,800 a month. And so we were both 26 years old. $2,800 a month was the moon.
Yeah.
In today's dollars, I don't know what it equates to exactly, but it felt like somebody who's staring down a $4,000 payment now is telling me man, this is a stretch.
Yeah.
I make $10,000. I've got taxes. I've got healthcare. I've got this. And so, as a buyer, you want to time it based on your readiness in your life.
Right.
You're not timing a market and oh my gosh, if we wait 2 quarters, will home prices cool off by 3%? If we, wait another 9 months, will rates maybe go from 5 3/8 to 5 1/8? That to me is a lot less important than all right, based on our family budget, we talked to somebody, and this is where I love to just give people the information. 500, 550, 600, 10% down. Here's what that looks like. And then you tell me.
Yeah.
I'm not the one to say $3,800 is too much or $3,500 is our budget for housing. But for me, that $2,800 felt like a stretch.
Yeah.
And I'm so glad we did it, right?
Yeah.
And you find a way to kind of make it work. You think about where some of your money goes and where your priorities are. If you can make that car payment for that car you probably don't need or some of the luxuries that most people live with, invest in an appreciating asset and something that, and it always works out with a long enough hold time, right? We're writing 30-year fixed rate mortgages. We're not writing NAG, AM, some of these crazy mortgage products is where people got really screwed or lost their homes or what that. So you buy a home, you're all right, $3,800 is my budget. It's a 30-year fixed rate mortgage. That's not going up, right? Yeah. And so if the trajectory of your income is going up,
right?
If over time maybe rates come down, you could refinance so the mortgage goes down, whatever the case may be, it gets easier over time. But I think in the beginning, for a lot of people, it always feels a little bit uncomfortable, which most good things in your life are that way.
Yeah. Well, and we've talked about it. It's even when we are ready and we do qualify, we need to be prepared on the back end of okay, we need to make sure we have backup just in case, say you get laid off. She's had a lot of job changes over the years of you don't want to get stuck also in a job that, that you don't enjoy too. So with her, she's, been figuring things out and kind of bouncing from different jobs just based on, how the culture and the environment has been. And it's okay, well, if you get your stuff stuck into this mortgage, then, like you're going to be at that job until something else changes. So
Right.
we've been trying to talk about that and plan for that. But I'm sure there's a lot of first-time home buyers that are in situations similar, or if they don't get advised properly, then they end up in really bad cases.
Yeah. So. The best way to avoid that, in my opinion, and this is a conversation I have a lot, is people are like, what's the max I qualify for? And I immediately tell them, wrong question. Like, wrong question.
Yeah, no.
Because, you're renting right now, it's $2,800 a month. You've got some money, saved at the end of the month, and you're able to put together your 5% down payment. Like, you kind of have a sense of what is a comfortable payment way better than I ever could, right? Because I'm just looking at, your income, your current debts, the new mortgage payment. As a mortgage advisor, I'm plugging in the numbers to let the system tell me this is something that's approved eligible. You can get a loan done at this debt ratio. But really, clients know better than I do. Sometimes clients like, yeah, I qualify for a $5,000 mortgage. I'm not getting anything more than $3,600 because I'm not comfortable above that. There's others where, maybe I'm looking at it and without knowing all the information, I'm like, yeah, they qualify up to $4,000 a month, but that's going to be a stretch for them. They're like, oh, well, actually, we didn't put my husband on the application, but he's bringing in $7,500 a month. And so like $4,000 a month is no problem for us. And so really, as a consumer, you go out there and you get educated to a certain extent, and you get presented with options, and then you decide, right? And for a first-time home buyer, a lot of times it's easy, especially if you start with the real estate before you start with the mortgage, to be like, oh, I love that house. Like the kitchen speaks to me or whatever it is, and people start there and they get excited. And you'd be surprised how hard it is for me to like snap someone back to reality, be like, let's talk just numbers.
Yeah.
My advice is like talk numbers first, right? So before you get googly eyed looking at, kitchens and dreaming about living in this house, because it's your first house. You're not going to live here 40 years from now. So don't go out and spend $900,000. You're young, you might want to travel. I don't want to get somebody into a mortgage that's going to, add stress to their life and feel like this big weight.
Right.
I'd rather have them be like, yeah, we qualified for $900,000. We bought something for $550,000. It's all we really needed, 2-bedroom, 2-bath. And with real estate, you hold it, generally speaking, it appreciates. I know that, historically it's like we've had 6 bad years out of 100. So everyone's going to point to 2009 and, be careful, it might go down 8%. Generally speaking, you hold on to real estate, it's going to appreciate. And so, you buy a house well below your means, a payment you can afford. And then in 6 years, like, oh, well, we bought it for $525. We could sell it for $610. We only owe this much, and we've paid down some of the principal. And so let's take that $150 and apply it to the next house, because now, she's got a new job or she's making more money or whatever the case may be. You don't have to buy your forever home the first time around.
Yeah.
I'm a numbers guy.
Well, and the property that's $100,000 less might be a better investment over that 6 years, to where, that home is actually going to appreciate more, just depending on location or what's happening, in the area, things like that. So, we're looking in Rancho Cordova just because we want to be, close to the studio and just everything we have going on. There's a lot of new builds, Rancho Cordova, Folsom, Roseville, Lincoln. Do you have any input or advice in terms of new builds? My brother just got a new build in Roseville. Like, is there anything that you say to like look out for, or anything regarding new builds that?
Yeah. So there's definitely pros and cons. And this is where I'm always going to speak the truth. And sometimes people are like, wow, for a mortgage guy to tell me like, go out there and work with the builder's lender and grab that incentive, that's different. Mm-hmm. But quite honestly, a lot of these new build developments, if they're trying to incentivize the buyer by offering great mortgage terms, 9 times out of 10, they own the mortgage company. They could write the mortgage and lose money, right? And so take advantage of that if you're a consumer. Yeah. If they're offering you 4.99% on a 30-year fixed, great. What is kind of a little bit of a hidden secret in that world is that they do that because then they can get you to pay the $650 price tag versus, selling it to you at $620 620
Right.
and not having the incentives built in. But quite honestly, if I think about it from the consumer's perspective, if I'm the buyer, and for most buyers, like I don't care if I pay 620 or 650. I'm looking at what fits into my monthly budget. And 650 at 5% looks really sweet, right? It looks better than 620 at 6.25. And so one of the biggest positives of new builds is the incentives on the mortgage side. The mortgage rates, for sure, have made it like, you buy a $500,000 house, 1% of 500,000 is $5,000 a year. And so that's like $400 plus per month on your mortgage payment.
Yeah.
So, $499 might not even be the best. They might offer $399. Imagine 2%. Imagine it's saving $850 a month on your payment with this incentive. Take that. Some of the cons that I've heard, because I'm not a construction guy, I'm just a math nerd, are that like these new builds are not built the same.
Like structurally.
Right, yeah. And so,
wiring behind the wall, you open it up. And
anybody who's done business in California knows it's freaking tough, man. Like there's all this red tape and there's all this cost. And so like, I don't necessarily fault the builders for it. Like they got to pay all these permit fees and all the stuff that comes with doing business in California. And so in order to make a profit on the house, they might have to use material that's not the finest quality. And so, I've had clients talk to me, they're like, man, I'm looking at this zip code and like the house built in 1980 is more expensive than this house that they're building in 2024.
Right.
And,
material.
Yeah. I mean, to each their own too. Yeah. It's like, I'm not going to tell somebody what kind of car to buy, but, with that new home, be prepared for usually there might be Mello-Roos or some extra taxes baked in. They're going to build a school down the street. And they're going to do all this stuff that's built into your tax bill. And, for a lot of families, it's like, well, my backyard is 8 feet deep and, there's no yard. So that can be another con. But like the mortgage incentives, people always think that I'm like, I get referred to somebody who's buying a new build that I'm going to be like, no, you got to use me. Usually you don't. Usually that $15,000 incentive that the builder's offering, I'm going to tell you to use that lender. I had a buddy buying Folsom. And he's like, Matt, this lender I'm talking to is a complete idiot. Like, you got to help me out. I'm like, idiot or not, like that incentive is tied to using them. Like you have to use them to get that incentive. I'll still coach you and talk you through this mortgage process, even though you're not too keen on the person on there. But that's a thing that unless we get into a market that becomes, a really like crazy seller's market where they don't have to offer any incentives, which quite honestly, they've backed off on some of them. But a lot of these times it's like new builds, they want to sell them fast. They want to sell them at a premium price. So they offer those rate incentives and mortgage incentives to get somebody in the door. So it can be a great option, but really, to each their own. Some people are going to buy those new homes and be happy with them. Slightly higher taxes, maybe smaller yard, maybe some shoddy materials, but great mortgage, lower payment versus, a resale home where, it's older, but it's more structurally sound.
Right.
And, you got to do traditional financing, but, talk to a great mortgage broker like Matt, the mortgage guy, set you up nice.
When it comes to energy, solar, those options, especially if you're living, in a certain county here in California, if you're on PG&E. So what do you see with that also with new homes, but then just homes in general? Yeah.
So, since I'm not super involved in that new home buying process, because 9 times out of 10, it's the builder's lender.
Right.
I don't know whether they're structuring it as like you buy the solar and it's owned, you're leasing it. In 2024, if you build something new, like it's got to have solar. And so like it's going to be attached to the home.
But does it have to? Because what I've heard is that they build solar, but it's not quite enough to power the home. So then you're going and you're buying the remaining power from PG&E, and they're upcharging you for it. And so then you're
worse off.
Yeah.
Yeah.
So
it could be. I honestly not an expert on that, but I do know that you want to be careful. It still surprises me. And granted, I'm the type of guy who like, oh, I trust this person. Great. I'll go get a new cell phone at AT&T. I'm not reading the fine print.
Right.
Big, huge financial decisions like a mortgage, a solar agreement. I ask people and they're like, I don't know.
Yeah.
And I'm like, dude, you don't even know if you own it, you're leasing it. And so, buyer beware there. Because I'm sure it's structured different in different places. Sometimes, they actually build the system that's going to support the house and cover that energy.
Right.
You know, energy costs in California are crazy.
Yeah.
For me in Sacramento, luckily I'm with SMUD, where it's not as crazy as PG&E.
SMUD, much better.
Yeah, cheers. SMUD, you guys are friggin' charging me a lot too, man.
Yeah.
Maybe I should shut
They're
down.
going up too, yeah.
Yeah, the pool and the spa and the...
My parents' bill in July, it was $1,300.
How big is the house?
Around 3,000 square feet.
Wow.
Yeah.
Yeah, that's wild.
It's up in city of El Dorado, so over by Union Mine.
Okay.
Yeah.
$1,300.
Yep.
Yeah. They like the AC low.
Dude, that's the thing is they don't even run the AC that much. So they got an above ground pool that they just put in for the summer, but they don't. It's not like they're running the air 24/7.
Yeah. Well, you know what that ties into, honestly, is like everything's more expensive.
Yeah.
And so that's why the conversations around buying a home and finances and affordability, like it's continuing to be the number one thing that people are concerned with when buying a home. For me, I don't know if it's necessarily going away, right?
Yeah.
And so it's one of those things where, you know, if you're waiting for the perfect time, if you're waiting for all the stars to align, you might wait yourself into your 60s.
Yeah.
And, you know, you just want to make sure that when you do make the leap, what I found too is I think first-time home buyers, like the average age is probably getting older, which isn't a bad thing, right? Like you're financially stable and you're ready. I saw a crazy stat the other day. I think between 25 and 35, like 17 or 19% of people are living with mom and dad.
Wow.
It's like the highest it's been since the Great Depression.
Wow.
Damn. I saw that stat and the spin we had on this mortgage conference, or at least, you know, my good buddy Barry, who was presenting, was like, they're going to be buying. You know, rates go down to 5.25%. They're in the market because 25 to 35 is a big segment of first-time home buyers.
Yep.
But, you know, all the stuff we're talking about, energy costs are more, and, you know, gas is more expensive. And I was talking to my Uber driver on the way home from the airport about, you know, $1.75 to $5 for a gallon of milk, man. It's tough. You know, with respect to mortgage, like I said, like that's an investment that over time will, you know, pay dividends. If you buy a home in California over the last 39 years, it's appreciated on average 6.9% a year.
Damn.
And, you know, we use models that's super conservative, using 4% a year, what that would look like for you and your net worth at 4%. But imagine you buy a house for 500, it's 535 the next year, 572, whatever that number is, with, you know, the 7% a year. You see how it's easy to imagine like the average net worth of a homeowner versus the average net worth of a renter.
Yeah.
Because I'm intimate with people's finances all the time.
Yeah.
And so I think I know a little bit about, you know, just consumer behavior, and owning a home and paying a mortgage every month, a certain portion of it is a forced savings.
Yeah.
Like the $300, $400, $500 a month that's going towards your principal pay down, it's paying down your loan balance as you live in it. Like you got no choice. You got to pay that, right?
Yeah.
With your rent or with anything else, like you're still paying for shelter, but none of it is going into this little piggy bank.
Yep.
And, you know, you wake up 10 years later and you've paid $55,000 down on your home or $100,000 down on your home. Like that's money in your pocket. That's net worth.
Yep.
And so you bought it for $500, you put 10% down, you owe $450. You look up 10 years later and you only owe $325, and the house has gone up and it's worth $620. You got $300,000 in equity.
It gives you so many options.
Yeah. And I'm just, you know, a regular kid from public school that owns a little bit of real estate. I was looking at it and I was like, if I just survive for another 20 years, I'm going to have X millions in real estate, you know, that, you know, most of it I've got tenants paying the mortgage and it's not me.
Yep.
And it's a reason that people always point to real estate as like something that has helped 90% of millionaires create their net worth.
Where are your investments?
I've got a couple fourplexes in Marysville, which is, you know, about an hour from here. And then I own 4 single families, my wife and I, community property state, you know, and what's hers is hers and what's mine is hers as well. And so we own, a couple fourplexes in Marysville and 4 single families. And people always ask me too, like, California's a terrible place, you know, because tenant landlord laws and stuff, like great tenants, on-time rent. even the stuff that's, single family and not necessarily paying huge monthly cash flow. Again, 6.9% appreciation on a few $1 million in real estate is real net worth being added to the balance sheet over time. And, being a math nerd like I am, I think last month it was $4,780 on debt pay down. Yeah. So I'm paying my little $2,200, mortgage payment on my primary residence. Yep. I'm not paying any of the other 5 mortgages. Tenants are paying those, but $4,700. And then next month, $4,722, and then $4,744. Yep. Over time, X million in real estate holdings, I owe 1.6, and then that slowly comes down. And so, I'm just an average dude with a little bit of real estate, and awesome. it's gonna work out.
So that kind of gets me into my last question to kind of wrap us up is, what do you see for yourself, your business and personally, over the next 10 years? What do you anticipate being in the industry long term? Is there anything else that you want to get into? Tell us a little bit more.
Yeah, that's a great question. And honestly, it's like, I think people could probably relate, it's like it changes all the time, right? And somebody like me who's got an entrepreneurial mind, like at certain points, I was like, I'm going to open up an insurance agency, and, oh, you know what? I might just go content creator full time, and then I'll have the mortgage thing on the side. I think I'm back currently to like, I love mortgage. Yeah. I love helping people. Yeah. I joined U Mortgage 3 years ago as a founding partner. U Mortgage has grown from the dozen loan officers we had in 2021 to over 300 today.
Oh my gosh.
We'll do something like $3 billion this year.
Wow.
And so I'm going to be involved in mortgage, 5 or 10 years from now, whether or not like I'm in the, trenches, writing mortgages, having every single client conversation. My guess is that I won't be doing as much of it, right? I'll be, still, I love educating people. So I feel like, long after the day-to-day conversations about what are you looking to do? Where are you looking to buy? Long after that's gone, I think I'll still create content to educate people.
Yeah.
But I'll be with U Mortgage, who will be the number one mortgage brokerage in the country. Like, we're already top 5. Yeah. We're 3.5 years old, and $3 billion this year, probably $6 billion next year.
So like for UWM.
Yeah. Well, we got lots of great partners. Honestly, we're broken to UWM and AFR and Windsor and EPM. A lot of great partners. But again, it's like numbers are great, but like last month, 647 families got a great client experience from a company that cares about client experience above all else. We've got great wholesale rates. And so mortgage side, I'll be there. My boys are 15 and 11.
Okay.
As the kids get older, you realize like, man, they don't need you as much. They're off playing with friends. They're doing stuff. So dude, 10 years from now, when my boys are 25 and 21, my wife and I are going to be traveling, having fun. If U Mortgage grows and my net worth grows according to plan, I'm going to have some sort of ownership stake in the Sacramento Kings.
Oh, wow.
At the very least, I'll continue to hold season tickets, and you'll see me at quite a few games.
That's awesome.
I've got like a fun idea of going to like every regular season game in a season one time in my life, where I'm actually traveling to all the away games as well.
That would be sick.
And so, that's at the end of the day, what most entrepreneurs and people are searching is like just freedom to do fun stuff.
Yeah.
And so, over the last 20 years, the card room, mortgage, like I've worked really, really hard, and I'll probably never slow down with work. Work can mean different things to different people. It's essentially just adding value, right? Like if I'm adding value to the marketplace, whether it's education or, being a good partner to real estate agents. So I'll probably continue to do that. But I think that the next 10 years from like a family and lifestyle perspective is like, we want to do a family cruise in Europe next year and let the boys see some more of the world and do some traveling. My wife and I for sure are like already crying about, the childhood, flying by quick,
coming to an end,
but equally excited about, what it's going to be like to be an empty nester and traveling around. And, like the mortgage conferences I go to where we've got kids in school and kids in sporting events, like kids will be gone to college, and me and my wife will go there and check out the poker room that's in that city, and go do
That'll
some
just be a
touristy
new
stuff.
stage.
Yeah, and that's the thing too, is man, life goes by so fast, and you look up and you're like, oh my gosh, I'm 44. I'm giving somebody advice about having their first kid. I have given this advice to somebody recently who had their first kid. I'm like, every stage is fun.
Yeah.
Like when they're super little, you're like, oh, that's so fun because of this. And then they're like, oh my gosh, they can like stand up and he can hold a bat, and like he can swing a baseball bat. That's really cool. And then at 6, there's like different fun parts about every single stage. And so like I've enjoyed every part of it. Mm-hmm. Even, fighting with my 15-year-old because he thinks he knows everything. It's fun in a different way, right? Yeah. Because I get to go to CalFit and run basketball with them, and that's nice. Sometimes the old man makes a few shots, and I felt good the last runs we had.
That's awesome. I love that. No, that's cool, man. Yeah, I'm excited for you and your journey, and everybody's gonna reach that that point. We try to bring people on for the visionary mindset, people that kind of have a plan and have achieve great things in their life. So makes you a visionary, and we're excited for your journey. So thanks for coming on the podcast. Where can people find you? Obviously, Matt the Mortgage Guy on YouTube. But
Matt the Mortgage Guy UM, and that's U Mortgage. So Matt the Mortgage Guy UM is on Instagram. Matt the Mortgage Guy on YouTube. 1,100 plus videos, and so I try to point anybody who's in the market. Fellow loan originators follow the channel. I think real estate agents probably can glean some value from that channel as well. But I think I'm Matt the Mortgage Guy on TikTok.
Okay. You're on TikTok.
Yeah.
Nice.
Matt Gouget on Facebook, where a lot of the family stuff lives. So if you Google Matt Gouget Mortgage or Matt the Mortgage Guy, like I'm not too hard to find.
Someone will be able to find you.
Yeah. Quick shout out to I'm over 100 episodes on Get Better Every Day podcast. And so I'm having a lot of fun with that. That's a passion project where all kinds of different people, man, mortgage executives, former drug addicts, people from all walks of life, who are all trying to get better every day, which is something that, I try to live. Some days I do better than others.
I love it.
Yeah.
That's awesome. Very cool.
Yep.
Thanks for coming on the podcast.
Yeah, for sure, man. Thanks for having me, dude.
Yes, sir.
Yep.